Hello and welcome to EY's Facebook Live. Here I am, Chris Sanger, Head of Tax Policy at EY, with two very established guests. We have Pascal Saint-Amans from the OECD.
Hi, Chris.
And Marlies de Ruiter, who's joined us from the OECD and now leads our international tax services here with us. So, what I'd like to discuss today with our panelists is where we're going to with tax and with all the work that the OECD is doing. So maybe to you, Pascal. Now, we've had a number of questions given into us. So let me give you the first question that's been set out to us. So, first one for you. Now, I feel a little bit like a panel show here. So we've got more questions, and we'll see where we get to with the first one. So, Pascal, what will be the key priorities for businesses as they wrestle with tax compliance and increased geopolitical uncertainty?
I would say that the geopolitical uncertainty will largely be about Europe, what is going to happen in Europe. There is a new political dynamic there, and there may be some quite significant changes in Europe, we'll see. It depends on the outcome of the German election, on who's going to be the next finance minister, but clearly France and Germany may revisit the way Europe has been constructed. So that's something to watch. Overall, as you said, compliance strategies, I think, should be the core strategic priorities of companies. BEPS is in an implementation phase by governments, tax administrations. It must be in an implementation phase by companies.
Indeed. And Marlies, your thoughts on that?
Yeah, I think very much alike what Pascal says. I think there's one element that I think is also very important, and that is before you comply, you need to know what you have to do. And I think there's a lot of uncertainty now because the rules are changing, rules are more subjective, and then there's not that much guidance on interpretation. So business will also need to determine themselves what is my tax policy and how do I want that to implement that.
So going from that theoretical view into actual practical nuts and bolts of actually
yes,
compliance.
definitely.
Okay, thank you for that. Next one we have here is what geopolitical drivers will fundamentally impact business and tax strategies in the next 6 to 12 months?
More or less, I've said it, I think European changes may. And the other big one, that's the elephant in the room, especially here in the US, which is the US tax policy reform. So we understand that the DBCFT, the destination-based cash flow tax, is dead. More than less, which will probably result in less disruption than if it had occurred. Now the question is, shall we have a US tax reform or not? What it will look like? What we hope for is a rate which should be reduced to 2025, base broadening measures which would be aligned with international law to be seen, and finally move to a territorial system, which I think would relax US businesses, but also European countries and other countries, because the current system with worldwide taxation, very high rate, check the box, actually results in aggressive practices which trigger some reaction. So US tax reform, I think, would be helpful in getting countries together.
And one of the questions we normally get in Europe, for example, is with all this change going on in the US, if they do actually deliver that, what will that do for the changes in the policies being adopted by European countries or elsewhere in the world?
Depending on the reform, but again, a move towards territoriality with some base broadening measures which would not be at odds with what other countries would do, I think would illustrate a good convergence. Will it happen? That's the big question.
So will it happen?
I hope it will happen because of the convergence. I think with that it will be a very, very positive. I would add one more element where the convergence may not be there yet, and that is digital tax. I think that will be definitely something in the tax area where we will see kind of guidance being developed and hopefully get to international coordination.
And indeed, we're seeing such a lot of activity at the European stage. How does that European work really fit in with what else the OECD is doing? Are we on different tracks, or is this all coming together in a nice coherent whole?
Interestingly, this is a panel made of 3 global practitioners, but we are 3 Europeans. Even though in my position, I work for the US as much as for the European countries, and I think I'm sensitive to the US perspective there. So we need to make sure that these countries can converge. Digital economy will be the big challenge there. And I think we have also to take into account the US view of the world and the fact that Europe may have appeared as taking unilateral measures or as having taken some discriminatory measures against US businesses. That's something that Europeans need to keep in mind in the state aid cases, in their directives, even though overall, I think it's also fair to say that the directives that they have adopted are broadly, if not fully in line with the BEPS standards. But we really need to keep the dialogue between Europe and the US and Japan and China and the other countries. The G20 remains instrumental. Now, the tendency of some countries to move, if not unilateral, at least more centric to their own interests, to be the first one, the Netherlands second, but US first. That's to be watched, challenging times, but the G20 and the OECD can be a good platform to organize that debate.
A great way of actually bringing all the different arguments together and making sure we've got a good opportunity to talk through this. And the timetable of all of this, we're looking for an OECD report in April next year. Do you think that's giving enough time for businesses to engage in this, Marlies?
I sure hope so. And I think, so from my perspective, kind of the convergence is important for all countries. And that's why the G20 OECD platform is so important. So if all countries recognize that if they go different directions, that it will be chaos, then I think you will get to a very constructive dialogue. And BEPS has shown that once you have that dedication, you can get to the result. But that dedication is the first and the crucial step, I think.
And I think it's worth just reflecting that we now think of issues as unilateral, where 10 years ago, everything was unilateral. It's kind of the BEPS has been such a great process.
I'm glad to hear that. And I think, Chris, you're extremely fair to point to this. 10 years ago, countries, the principle was sovereignty of countries. Mm-hmm. And they were cooperating on very little aspects. Now that they have decided to organize large cooperation, practitioners just see the differences. While yesterday they just saw what was convergent, today they just saw the differences and complain about that, but they lose sight of the fact that most of what we've done is about convergence, and it's working. Unilateral measures have been quite limited, and even on the digital economy, where we didn't have that much of a consensus on Action 1 report, countries are not moving unilaterally. They're threatening to do so, and they would be entitled to do so if there is no prospect of a global agreement, but they're not doing it. They're waiting for this report by the OECD in April 2018. We'll, by the way, do a public consultation the first week of November in San Francisco to give an opportunity to businesses to comment on that and make the case that we need to find, in the long term, a global solution that will take the US and the Europeans and others to agree. It takes two to tango, as it is said, but it's really true there.
Excellent. Well, let's move now to another question. Here we are. So 2017 has shown early signs of countries starting to invest in broader business incentives to stimulate and sustain investment. What steps can government take to accelerate this change?
Maybe Marlies wants to respond on this one first.
Yes, I think, to me, I see two dynamics. On the one hand, what you see is that kind of once the OECD cleared kind of IP incentives, more and more countries have started introducing those. But on the other hand, there's another process ongoing in harmful tax practices, where kind of the OECD G20 inclusive framework kind of is also reviewing kind of all other regimes and see whether they are harmful or not. So on the one hand, what I expect is indeed kind of more introduction of regimes that are okay from an international perspective. But I also expect that there will be changes to regimes and maybe withdrawals of regimes that are not in line with the harmful tax practices and norms. So that double kind of dynamic is what you will see in the coming months.
Which must be quite difficult for businesses that are currently actually benefiting from those type of regimes and thinking, what does that mean for them and for their level of certainty?
The good thing about this one is that it will always be prospective. So this cannot be retrospective, which is, I think, good for business.
Okay.
The only compliment I would add, because I agree with what Marlies has said, is that there is a trend to reducing corporate income tax rates, which is a way to facilitate business, and there's a good incentive to investment, pro-growth taxes, tax policy mix. So we see this happening, and I agree with Marlies that the dismantlement of harmful tax practices may hurt some companies which benefited them, okay, point taken, but frankly speaking, in terms of competition, in terms of leveling the playing field among companies, that's a good thing from an economic perspective. So I think we should rejoice, even though some will be losing some benefits, but which were unlevel the playing field.
And I guess with all of this change, the one comment coming back from many of our clients is that there's so much change all of the time. There's so much uncertainty given everything that's happened with BEPS. And now we're in the implementation stage. We were thinking we were going to get some level of certainty. Now we're getting more change in relation to digital. The OECD's got their initiative on tax and uncertainty and addressing that. Is that going to have a chance to really deliver, or are we always going to be in consistent change?
Well, if we think that the OECD can reduce the appetite of national parliaments to legislate on tax, that would be a dream or a nightmare, because legislating on tax is core to democracy, to consent to tax. So there will be changes all the time. In the international arena, we have the chance to have tax treaties. They are long-term instruments, legal instruments. They fix a framework, and we need to keep that framework. Sometimes we need to speed it up a bit, but to increase certainty. The multilateral instrument to modify bilateral treaties automatically is a way to increase certainty. Instead of having tax treaties, a tax treaty network which is not updated, which is inconsistent, it will bring more consistency. But the tax certainty work is not that much about telling Parliament don't enact legislation, even though we can advise them on good tax policies, and good tax policies shouldn't include permanent changes, but it's more about tax administrations. I think tax administrations must provide more certainty to the taxpayers. It's not a one-way street. The counterpart is to get more transparency to tax administration, and that's the duty of taxpayers. But the duty of tax administrations is to provide better service, but also more certainty. And we are launching a few initiatives, as you know, like ICAP, International Compliance Assurance Program, but also the review of the mutual agreement procedures, promoting arbitration, and a few other things. So it's high on the political agenda. It must remain high, and we will be reporting next year to the G20 on how tax certainty is making progress in practice.
And your perspective on the likelihood of tax certainty, and how we can, maybe from an advisor or a company perspective, engage in kind of making that nirvana world actually arrive?
Yes. I think what we should recognize is that for a lot of taxpayers, a whole lot of new subjective rules are introduced. And there's not that much interpretation on these subjective rules. So especially in relation to transfer pricing, kind of the big issue is, will there be retrospective effects, and what kind of impact does it have? And if I want to become BEPS compliant, do I expose myself for the past? So there, I think a more coordinated approach would be good, kind of more looking at, so what would be solutions where there would be a win-win for governments and taxpayers, because taxpayers would become fully BEPS compliant. But they would be getting certainty. They would be really kind of moving well into the BEPS area. And they would be sure that they are given certainty by the tax administrations that they won't be targeted on this. And that would be a great thing to do. The second thing is principal purposeness. I think still very subjective. There's no clarity on what countries will be doing on that. And that is also creating uncertainty. Do I need to move? How do I need to move? And there, kind of some more work would also be very much welcome.
And I guess one final question then. We talk a lot about the G20, the OECD focus, and it's achieved a huge amount in terms of the BEPS and with the inclusive framework for 102 countries now. But there's also the platform for collaboration with the UN, the IMF, and the World Bank. Do you want to just give us a couple of your thoughts on how that's working and how that fits within this now, the new 102 BEPS?
Two main objectives. The first one is that we don't waste taxpayers' money by duplication. And international organizations are too good at duplicating. So we wanted to be careful there. And this platform for collaboration on tax is a way to make sure that we divide the work of technical assistance. The second aspect is related to the technical assistance. The world clearly, in international tax has become global. global taxpayers, tax administrations are local, but there is global cooperation. So we need to have developing countries on an equal footing. Equal footing can be a tricky word because they can be, by law, they can have the same voice, but they don't have the same capacities. We need to provide them with assistance to help them participate to that framework. And the platform for collaboration on tax with the IMF, the World Bank, the UN, and the OECD is designed for that. So there is a lot of potential. There is a lot of money by aid agencies. Why so? Because domestic resource mobilization is one of the key objectives of the UN, and we need to use that money smartly, wisely, to help these countries assess their own taxes, raise the level of taxes, not for the principle of having more taxes, but for being able to rely on their own resources, which is the best way to install democracy by reliable governments to their people and so. So that's a dynamic which is a long-term one, which will require the investment of all international organizations.
And I guess the other, maybe just a final one to bring it all together. We've had lots of comments about all this thing happening. We've seen BEPS now go into implementation stage. We've got the discussion of digital. Where next for the OECD? Where's your next big project? Is it delivering all of this, or is there something else that we should be looking forward to?
Digital economy is the next challenge. Implementation is the key word for 17, 18, 19. I don't see any big bang change coming by then. Implementation, convergence, consistency is what we need to take care of.
Excellent. Well, I'd just like to thank you both for joining me, and thank you very much to our audience joining us here for the EY Facebook Live at EY's International Tax Conference. Thank you all very much for joining us. Thank you.
Thank you.